Good morning, everyone. How are you guys doing today? Okay, let's without wasting time, let's head into analysis of NQ. Okay, so previous day high is 29,974, and previous day's low is 29,909.75. 29,209.75. Okay, there it is. So that is what we have on daily time frame. Okay. Moving to 4 hour time frame. Yesterday, just give me a moment. Let me put this on the bottom. Okay. Yesterday, when at the beginning of this session, I was saying that even if price wants to move up higher after taking weekly low, it needs a 4 hour candle to close below it and give us a good rejection. And I believe we are seeing the same thing. Look at this, good fall below and a good reaction. Now if this continues, then in the next, like in coming time, this would be our target, previous fix high, which is 30,600. But that is just an observation. We still have 27 minutes left for this 4 hour candle to close, and let's see how it closes. If it closes strong, then we're looking for bulls. If it closes a little big, then I believe bears will continue to push price lower. Remember this, there was an S&P here, there was no liquidity sweep, and this is a big wick. There is a draw on liquidity right here. We are leaving this thing open as of right now, so keep in mind. Keep this thing in mind that price could come and tap into this. Okay, so there are no 4 hour value gap. Like there is one up here, so very minor, and it is already between the wicks of this, so I'm not much concerned about this value gap on 4 hour time frame. Let's move to 1 hour time frame. If 1 hour candle closes above this, then watch this, we will have this bearish value gap. 1 hour bearish value gap will get inversed if we get a good closing above this value gap, which will then turn this order flow into bullish, and these will become your draws on liquidity, 29,581 and so on. Okay, so that is what we have on 1 hour time frame. 1 hour time frame, we have these highs as draw on liquidity, high side liquidity. The high of this candle is 581, perfect, and another high is London high that we will mark it on 15-minute time frame. Okay, okay. So we are currently trading in 15-minute time frame, 15-minute value gap. Look at the price up. Now the momentum up is pretty good. Let's see. Let's see what we have here. We have here is London session high is the buy side liquidity here. Asia session high is also on another buy side liquidity. Right here, high of this candle is 29,558, and the high of this candle is 415.25. Okay, so the levels are marked now. Let's move to 1 minute time frame. I can see a lot of wicks. What, there's a lot of wicks, and today is FOMC meeting minutes at 2 p.m. so we can expect price to chop, but at any point I was still expecting price to give us a good momentum in first hour and then start chopping around. But looking at the price action, I don't feel that we are going to get that. Look at the wicks already. So it might be another day where you have to keep your money without risking anything. Okay, so there's nothing much up here. Watching on 15-minute time frame, looks like drawn liquidity is now Asia session high. We got a good candle closing below London session low. Price did reverse, but it did not give us a good V-shaped reaction that we are looking for. Chances are that price could come down, and especially I'm gonna take out this 1 hour fair value gap, especially in this location where we have a 15-minute order block overlapping with this 15-minute order block overlapping with this 15-minute fair value gap. Okay, now what do we have here? Liquidity sweep, V-shaped rejection, liquidity sweep, V-shaped rejection, but all of this thing has been done with wicks, so nothing much, not much conviction into this. Let's see if they have any news coming out right now. IMF officials see potential risk from a correction in the AI space, which could also affect South Korea and other countries. Okay, that's not something I'm looking for. We only have FOMC meeting minutes at 2 p.m. and tomorrow we have jobless claims at 8:30. So that will be a good thing to move market. Yeah, so those are the only two things. Watch this candle, that's without wick. This candle is without wick, could become a draw on liquidity. At the level we did get a liquidity sweep and V-shaped rejection, but the point being, it is first of all it is within first 15 minutes of the trading session, which is we do not trade into that. Second thing, this is a lot of things are with wicks, so this is not the signal that you are looking for, and no trade here. 1 hour time frame, if it closes above this weekly low, it's almost somewhere right there, 280 to 90. If it closes above, then it's going to inverse this fair value gap, and then we might see a good momentum on the upside. Now watch this thing. This fell a lot at 4:15. There might have been some news that led to this good sell-off. Now people who were holding position here did not get a chance to move, did not get the chance to get out, right? So what would happen? Price would go all the way up here. What happens is price would go all the way up here, maybe even take out this high, and price will start dumping down again. So what trade will we get? The trade that we will get will be London session high getting taken out, London session high getting taken out, a good candle closure above that, and If we get to see a good reversal, then we'll see that. To be honest, looking at a 1 hour and 4 hour time frame, I'm pretty happy to see price moving up higher. And if we get a good continuation on 15-minute time frame, I'll be happy to take that trade. All in all, before entering into any trade, what we need is three things. We need a level of interest, which can be 15-minute swing high, swing low. It could be session high, session low. It could be 15-minute fair value gap. It could be 15-minute order block, breaker block, and so on. Once we have those level of interest, we need price to retest those levels, and while retesting, it should give us the signal on 1 minute time frame. What is that? It could be liquidity sweep, V-shaped rejection with order block, could be with breaker block, could be with fair value gap, or could be with IFVG. And as part of the third thing, which is CVD should be supporting the signal. A supporting CVD is always good. The strength of the signal can be determined based on CVD. Volume really helps out. Now watch this: liquidity sweep, V-shaped rejection, fair value gap, overlapping along with this order block. This area could become a strong zone for buyers to step in again, especially 1 hour time frame is looking bullish. So that would be a good area for pullback. This for chances of this fair value gap working are high. Not that I'm going to enter on this fair value gap. Simple reason: there's no level of interest. It's just random somewhere. Chances of this high getting taken out is pretty high. So no shorting here as of right now. There is a bearish order block right here, which could be in play. There is this bearish order block, could be in play, but let's see how CVD is. CVD is looking good, but depending on this candle, yeah, it closed green. Not a good sign for a bears or reversal signal. Look at the movement of the price. It's slow again. It is not moving moving as usual, which means it's the chances of trapping today are still possible, just like yesterday. Yesterday there were no good setup. We did take a stab into one of the setup but failed. Then there was another setup which did not deliver. It delivered only 50 points and then came back and could have taken out our break even point. Okay. So looking at the momentum of the candle itself, I can say that price is not moving that great or might not deliver, might not give us a good signal. Now this bearish order block, watch this. This bearish order block. If we have this bearish order block, then this becomes less probability of holding, but still price can do anything. So we just need to mark and wait for signal at that particular level. We do not want to get long in here, especially when I told you guys that. Also, yeah. So this this is the reason why we never enter long here. But watch this. I was saying the same thing right here. This fair value gap overlapping with this order block, price is moving. Price generally tends to hold this fair value gap, and it did. It took out the high. And whenever I've noticed this, price generally tends to move a little higher up that, at least 1:1, at least 1:1, which would be somewhat 80 to 85 points, which is above this buy side liquidity or condensation high. But we do not take out trades like that, especially if we are early in the morning. 80 points is nothing for market. It can move thousands of points in 1 minute if there is any news. We don't want to be risking anything in the opening session. Wait for the first 15 minutes. Let's see if it wants to go higher or lower. Once things settle down, we'll get setups. Just wait for it. Yeah, I'm gonna take this bearish order block out now. Yeah, this 15-minute fair value gap has also been inverted now, so it becomes an irrelevant zone. At this point, my eyes are on this small drawn liquidity at session low, and the reason for that is simple. There is no wick here. Could act as a good draw on liquidity. Now watch this. There has been a lot of buying volume. Price did not move up higher, and there's a lot of selling volume that came in. Now this could become a good signal, hence if we get a good candle close, we can look, but it's 70 points, but let's see. We can take some less risk here. 48 here and 30. We can either wait for this fair value gap to get tapped in or this bearish order block. That's a great signal. That's liquidity sweep, V-shaped rejection, but the issue is being the volume is not that great supporting this one. And so I'm gonna wait. The draw on liquidity is higher. The draw on liquidity is higher. I do not So drawn liquidity is higher, but I suppose price wants to move up higher, it might take down the sell side liquidity first before moving higher. Has tapped into this bearish order block is marked and is now, as per CVD, we have three green consecutive candle and we have against which we have three consecutive red candles. This is bearish, but looking at the volume, and price made lower low here, volume did not, which is a little bit, off for me. I'm still taking a stab here at 347. If this fair value gap gets inversed, I'll be looking to get out here. So my entry short is at 347.50. With the small risk, and I'll be looking to target this sell side liquidity down here. The break even point would be around here. Okay, I'm gonna get out of this trade. I'm out of this trade. There's one thing that I noticed is that I just got a signal. There's no level of interest that was supporting, hence I'm out of this trade at break even. So I did attempt one trade, but that was a break even. I'm gonna wait until it takes down this liquidity or it takes out this buy side liquidity. Now the signal is pretty good. It has supporting things as well: liquidity sweep, V-shaped rejection, fair value gap, order blocks, and everything. CVD is also as what we want to see: three consecutive green candles against which we have three consecutive red candles. The issue that is for me is there is this bearish order block, but not much into this. I'm gonna wait until price either takes out this buy side liquidity up higher or this sell side liquidity lower. Signal seems pretty good for price to continue lower. We have a draw on liquidity as well, but to be honest, even if I would have taken this trade and holded this one, it would not have been as per my level. Yes, there is this bearish order block, but as I said earlier, this generally is a weaker order block. We got a signal, I'm gonna still choose to ignore this trade. We will get better trades. If we start getting signals like this, it would be a great trading day. Okay, so for a while I'm out. For a while I'm out of this. Anybody still holding this trade should have something like this. And break even point would be somewhere around here. I'm not in this trade. I was in this trade, but then uh, took an exit at break even, as it was kind of against my rule. I forgot I did not see a level of interest. This bearish order block, not much fond of this, so I'm gonna wait for a good better signal here. So the first reason why I entered the trade was generally what happens is that if this draw there's this London session high has drawn liquidity, what price would do is create some small highs here and then reverse back. Once it reverses back, it will go down to some internal drawn liquidity and then come back up, leaving this as magnet for price to come up and alongside this draw on liquidity. That is the reason why I entered this trade. But then especially, and as soon as I entered the trade, what I thought was that uh, that is not according to my level of interest. That is just an observation trade. As soon as it struck me, I just went out of this trade at break even. So this is not the trade that we are in. It's just something that we should be like. This is the signal, there's this order block, and this is how you could have entered into trade in with the stop loss and stuff. CVD was confusing as well. Price made low, volume did not, which was a little bit hard for me to continue to hold on this trade without especially without any level of interest. So this is what the signal was, and this is what the signal was, and it could still work out. It could still work out, but as of right now, I'm not in this trade. As long as we get this kind of signals correctly, there's a good chance of us getting good trades. Yesterday we did not get any good signals like this. So as long as price prints signals like this, it's a good day to trade. If not, then we are looking to avoid that trade. Also keep in mind today we have FOMC meeting minute at 2 p.m. Price generally tends to chop around on that day. So keep instead of keeping your expectations high, I would try to keep it as low as possible. Keep your try to keep accounts safe. Do not risk it unnecessarily until unless everything meets your criteria. As you can see, again, it is not giving a good continuation. Like previously, in last 2 weeks when we traded, as soon as we entered the trade, price generally tend to move in our favor. Sometimes it would take time, but then it will still move into our favor, not just chop around somewhere like this. Do not forget this drawn liquidity. It can still become a level. Now watch this fair value gap right here, 15-minute fair value gap. Now watch this thing on 4 hour. What happened? Price took down previous day's low. Watch this. Price took down previous week's low and previous day's low. Gave us a good reaction, good buying below that low. Yesterday during KM session when I said this thing, if price wants to reverse back to previous week's high, it needs to give a good candle closure on 4 hour time frame and give us a good reaction from there. That is what we have noticed. As of 1 hour time frame, what this liquidity sweep, V-shape rejection. Look at this green candle. Now this looks bullish. So as of right now, if I'm looking for bullish momentum, bullish momentum to continue, then this is one of the level of interest that we have, which is 15-minute fair value gap. 15-minute fair value gap. Let's see what we get here. Now keep this thing in mind. Just because it taps your level of interest doesn't mean you have to enter the trade. The level of interest is just one point. You have to wait for the price to give you signal as well. If no signal, there is no trade. Now even if I have this level of interest right here, it's still fishy for me. Look at this 1 minute candle, look at this 15-minute candle. There's almost no wick to this. Now this becomes a good reason for me not to enter into longs here. But price can do anything. So what we'll do is we'll follow our setup. We'll wait for price to enter into our level of interest, give us a good good signal with supporting CVD, and then we will enter the trade. Okay. Yeah, majority of the time it's you have to be patient. There's still 8 minutes left. I don't want price to just give us a strong candle. Maybe it can wait for another 8 minutes, chop around here, and then give us a good tap. Let's see what price can give us. To keep this thing in mind, this is, even if price takes down this low and gives us a good signal, it is still inside this leg. Is not what a liquidity sweep looks like for me. Now good liquidity sweep is this. What this is high. This high gets swept. Now which is the highest high of the price? Now if price wants to sweep this low, but there are other lows here as well, and then give us a good V-shaped reaction, it's still not the best, signal for me, not A plus plus signal for me. Like this signal is here is A plus plus, where you see this high and this another higher high. It took out the liquidity up high, give us a candle closure, came back down with speed, which is V-shaped rejection, and then it went and tapped into this fair value gap order block. Yeah, it chopped around, but still the signal that I'm talking about is this. Now these are some obvious signals that we need. Yeah, we have to wait. This is a if this when price is coming down, if it slows down, this is a great indication that price could continue from here. My only concern is this no wick candle low. That is my only concern here. The price has tapped into the R level of interest. Volume is also negative, but still waiting for long signal into this 15-minute value gap. A weekly low here. Why are we looking for longs? 4 hour has given us a good strong candle upside. 1 hour has inversed for value gap. 15 minute has given us a 15 minute has given us a fair value gap here as well, which means chances of longs at current chances are very high. And because price took down London session low, look at this good candle closing below that, and it it is now moving higher to take out London session high. So London session high is draw on liquidity for me, which is at 29,415.25. If we get a good continuation candle coming out of this 15-minute fair value gap, it would be till 29,415. If not, then we'll wait for price to take down this low first and then see if we get any signal. It is a bit confusing if you continue to look from both perspectives, but you have to keep your mind open to both of the party and then decide who is stronger. 15-minute fair value gap, 1 hour bearish, 1 hour where fair value gap got inverse, 4 hour got a good candle closing above. Price has already taken down London session low with the candle closure that we look for and is heading higher. So all the thing tells me that we should be looking for bullish continuation. And we also have 15-minute fair value gap, which is the level of interest. But what we are waiting for is price to give us a good signal. I'll be happy to take this inversion. Not a big fan, but if we get an inverse, I'm looking to take a stab into this. The risk would be somewhere around 50 points. If and only if it gives a good candle closure and inversion of this small fair value gap. Inversion of this small fair value gap. If not, okay. Now that idea is still valid if it closes higher with green candle, but let's see. A trade is a trade, doesn't matter. We have level of interest, we have all the reasons to look for long continuation. The only thing that is concerning me is this first minute of the candle, first minute of market open did not leave any wick below, which means it could become a draw on liquidity. We got a good signal and look at that, it still continue to move lower around 80 points, would have given us 100 points as well. Another green candle would be great, but if price slows down, this is not a good thing. Just to inverse one fair value and small fair value gap, if it is taking 2 to 3 minutes, it's not a good indication for longs. Okay, this fair value gap has delivered. Now this is what would have happened if you just blindly enter longs at your level of interest, expecting that this fair gap would get inversed. Your stop loss would have got triggered if you would have kept your stop loss. See what's happening on 30-second time frame. It's the same thing. Now, even if I got the liquidity sweep, and now even if price goes all the way up higher, it becomes a little difficult because of these two wicks. And price is not moving that strong. It is not even trying to give us V-shaped rejection. And just by looking at the momentum, you can tell that that's not a V-shaped reaction. Just by looking at this momentum, you can tell that this was a V-shaped reaction. And this is by far the cleanest signal that we have got this week. The only reason why we did not hold this trade was the level of interest. Not much relying on this level of interest as compared to this kind of a value gaps. Now this looks like a good buy. Now this is what we are waiting for. Price closes above here. It has given us an inversion, but still be looking to buy around here. So I'm going to put my orders at 29,274. Hopefully it gives us entry. Your draw on liquidity would be somewhere higher. Okay, I have placed my order at 29. Okay, I'm in the trade at this breaker block. $15 fair value gap. We got a signal for this. Now let's see if it continues. Stop loss is below this low. Break even point would generally be, first break even point would be here. But I am also so partials would be here. Let's see. This is how I have formed the trade. Break even would be here. Trade partials would be at up higher. Let's see. My only concern is this draw on liquidity, but I'm still entering this trade because we got everything that we are looking for. If you notice, CVD as well, volume did not create a new low when price took down liquidity. This is a good signal for us. Support. This is giving strength to our signal, so we can wait. We have the level of interest. We have signal that we are looking for, which is breaker block. We got the supporting CVD as well. So if anything, then this is going to be our break-even point here, right here. You can also trim here if you want, but my partials would go around at 348. The 348 or 343 would be. So my stops are at break even now. It has tapped into this level. I'm looking for 348 for my first partials, where I will take out my 50% of my quantity. 50% of my quantity will be taken out there. We are already up 60 points, almost tapped into. Okay, I have booked some partials right here. I have booked partials right here, and now I have another. Okay, so my full exit. Okay, partials TP hit. We are looking for exit at 415 at, or let's just exit at 400, 29 400. So I'm going to take exit here. We are up 80 points. We're up 80 points. That's okay. We're up 80 points. Generally we would be out of this trade looking at that, but I'm gonna wait. The volume is, candle has been pretty good. Hopefully it continues. Volume is not increasing, which is a good, which is not good. So I'm gonna take one more out, and I'm just going to leave one quantity. I'm just going to leave like 80% of my quantity is out now. I don't want to be losing here. Price looks pretty good for continuation, so I'm still leaving one quantity open right now. That was a good trade. That was a good trade. We had everything that we were looking for, and look at that. First partial would have been somewhere around 75 points. Even 75 points. That's a great partial. 74, 75 points partial. Now what this fair value gap, it is overlapping with what this bullish fair value gap, overlapping with this order blocks right here. Should give us a, push up higher. Tapping into this fair value gap here, right here, should give us a good push higher. Not a great signal, it's still coming down all the way, but hey, it generally does this. I'm gonna add two more here. I have added two more here, added two more quantities up here. I'm expecting price to take out this 72 up here. Okay, we got an inversion, but not to worry. Generally, this order block overlapping with this fair value gap has turned out to be a good good indication for price to take out high before it takes out this low at, especially when you're trading on the side of the trend and you have draws on liquidity up higher. That's a good reaction out of that level. Expecting this high to be taken out before price can come back downside. It is showing more weakness than usual. I might pay out here. Yeah, I'm out of this trade now. Out of this trade now. Was a good trade. Was a good trade here though. The only thing that I was afraid of was the only thing that I was afraid of while this trade was on was this no wick candle. It generally becomes an issue. There might be some news coming in. And I'm just looking for the partial that we took. Yeah. This is a little bit odd. Let me see if I can just show it up here. Just give me a second. Let me just log into this trading view so I can show you how where my executions were. Just couple of seconds. Let me just quickly log into TradingView here first so that I can show you my executions. I also want to see where I entered long and where I entered short. I want to see those executions. It would be somewhere execution marks. Okay, so now watch this thing. So we entered short here first trade, then we almost took our break even risk. We did look for the risk. Okay, watch this. We entered at 29 to 72.75. We exited at 340 and 333. So that's 33 on that side and 28 on this side. So that is almost around 60 points of partials at first. 60 points of partials, and then we added to a 320. We added another to a 320, but because we had already bought it from the downside. My average was somewhere around here, 39,308, and that is where I got tapped out at break even. Okay. Okay, so that was a good trade, another good trade. Partials were at 75 points. I took my partials at 60 some points, 28 plus 33 and 40, so around 60 points. Yeah, either way, the loss that we made yesterday, we covered it up today. This was a good trade. This was a good trade. We had the level of interest as this breaker block. We got a good V-shaped recovery out of it, liquidity sweep and V-shape. Now this speed is what we are looking for. Once we got this speed, we entered at this breaker block high and waited for, kept our stop loss below this low. Because we were in 15-minute fair value gap, price did shoot up fast, and just within 4 minutes we hit our break even and we hit our first partial stop. First partial at 39,340, 39,350. Now this trade is still on. It has not taken the stop loss yet, which means price could still deliver up higher. But because of FOMC meeting minutes today at 2 p.m., chances of delivering, like this is what happens on day like this. Like delivery is not that great. We got a great signal, but delivery down the downside was not that great. Took us out at break even first and then continued to move lower, 80 points lower. Here this was a good trade. It gave us our exit first, like gave us our exit as partials first, and then and took us out at break even. The problem is with delivery. Days like this are always when you should not be expecting full delivery. You should always be protecting your capital. So what does this explain? What does this explain us? Yesterday we captured yesterday we lost about 46 points on our trade, and today we took our partials at 60 points, and the partials marked on the chart are at 75 points, which is closer to double of it, which is almost closer to almost about two times of what we lost yesterday. So even if you on the day when you lose, if you lose small, there are chances that on a good day you'll make it back. I'm not saying this is a great day to trade, but we still got the trade that we were looking for. Now it did not deliver all the way to 15-minute high, 15-minute swing high, as it generally should, but this was expected as today is a firm meeting minutes. And the thing that I was concerned, the sell side liquidity is still open here. Now this is not a great sign for this bulls to continue. Now watch, but this level, this becomes a magnet, like price leaving this magnet before moving up higher is now a threat to me. As soon as I entered this trade, like there was a threat, but we got all three things matching all together. So we did enter into this trade, especially 4 hour, 1 hour, everything was supporting us. So we entered into this trade, and we got triggered. Like we did take our partials, but this, like no wick candle here, will become a draw on liquidity. Now even if this 15-minute fair value gap delivers first, it could still come down to this level. It could still come down to this level. But what I'm expecting is, before taking up this external high at London session high, I also am expecting price to take out the New York AM session low. Either way, always have to keep this thing in mind: the threats or the draws on liquidity. Now, for longs, we have draws on liquidity as this internal 15-minute swing high as well as London session high, and that is where the price is headed, right? It has taken down London session low and has continuously been moving up higher. So that could become a draw. That is a good draw on liquidity as well, because we also had internal pool of liquidity, which is 15-minute fair value gap, which is also level of interest. We got the signal as breaker block today. We entered on this breaker block, and we got partials out at 60 points. Our desired partials were at 75 points. So I believe, so if you can stay patient, like one loss should not affect you. One loss should not affect you. Like those are part of the game. Not every day you're going to be at your 100%, because trading requires you to be at 100%. How do you solve that? How do you solve that issue? So as per my experience, on how I became a consistently profitable trader, the thing is that reduce the amount of time that you trade. Reduce the amount of time that you trade. You don't have to sit in market all day long. By selecting a session, which is, I have selected New York AM session as my primary session to trade into. As of right now, I do not have any secondary session. I do not trade Asia session. I do not trade London session. I do not trade pre-market. I also do not trade New York PM session. New York AM session has most amount of liquidity as far as I've seen. There is a lot of manipulation that goes around in first 15 minutes and so on. 4 hour candle closes at 10, so that also gives us a good reversal trades based on 4 hour candlestick closing. So You keep these things in mind. Select which session you want to trade. Select the time. Now I have selected that I'll trade only between 9:30 to 11:30, not even waiting till 12 for lunch. If I get a trade between that time window, that's great. If not, then I'll be looking to I'll be looking to uh, switch my like shut off my desk and just look for another day. Just look for setup on another day. It's not necessary that you have to continue to trade if you did not get a trade today. As an intraday trader, your job is just to sit there for the time that you have chosen, just like any other job. Like majority of the other jobs would be like 9 to 5, right? So you go in at 9, you come out at 5, you do the job in between. So same trading is the same thing. You but in this you have freedom to select your session. I have selected New York AM session, and that is around 2.5 hours long. I still choose to sit only 2 hours into this market. Normally just 2 hours of market. Okay, so that's how I preserve my mental capital. I don't need to think about market after that 2 hour after that 2 hour session is complete and before that 2 hour session is complete. Even in this 2 hours, the first 15 minutes we do not trade. So that's how you preserve your mental capital. You just wait for that one opportunity in that specific time window. Once you get that one opportunity is good enough. Once you consistently start doing this, you guys will understand that this is the way you preserve your mental capital as well as your uh, economic or your account balance. Days like this where you get trades, it's good. Days like yesterday, more choppy, yeah, you will make mistakes. Even with all these things you will still make mistakes, but those are part of the game. Those are part of the game. We did not do any revenge trade yesterday. Even if I saw the second trade, if I did not get an entry as expected, I did not take a trade. I did not look to cover back my loss because of one trade that we lost yesterday. So that's part of the game. That's part of the game. You just need to continue to show up every single day with the same mindset, same process. It's, same energy is a little bit difficult, but if you can do that, that's great. That's great. Now, see, the reason why I was eager to take this trade out at break even and put my stop loss at break even, did not wait for it to take the stop loss. This draw on liquidity is still there. But the delivery is not that great. Delivery is not that great, so we already fired one shot, two shots. One was break even, so we fired the other shot, which we got the result, and I don't want to be risking more than that, especially when FMC meeting minutes is getting closer, which is 3 hours away. Generally, price tends to chop around after this time. Even if it delivers, look at the delivery, it's not giving great delivery. So I'm gonna wait. Another trade would be tomorrow now. Until something obvious comes around. There you go. Withdrawn liquidity has been triggered. This signal was so obvious. This signal was so obvious, but like as soon as I saw the signal, I had a feeling that this signal is going to work. That's why I just, as a natural reflex, I entered shorts. But then all of a sudden I realized there is no proper level of interest. There was this 15-minute order block here, but I'm not much into that, especially when you're trading against the trend by 4 hour, 1 hour, and everything looks pretty good. Now this drawn liquidity is good. This drawn liquidity is good. But I would just not randomly enter into that trade. This was my reflex that I entered, and as soon as like that struck me that this is not as per my setup, I just took I took an exit at break even. If only I could have got this trade above this buy side liquidity, I would have just continued to hold this trade all the way till downside. Let's see what's happening on 4 hour time frame. I was expecting this thing as well. Okay. Look at this 1 hour candle. It has almost taken down the low. Now even if there are going to be this fair value gap, there is going to be this fair value gap, which is also BPR. But looking at this fall downside, which is all the efforts that bulls made or buyers made in this first, like this 1 hour candle, has been taken down. I can still mark that as level of interest, but especially it's too late in the session right now, especially on day of FMC. I don't want to be looking for another trade when I know the delivery we are not getting it. We're not getting good deliveries today. Watch this low right here. Tap below that low, just tap below that, bro. I'll be happy to see a good candle closure and a signal for higher side, as this is the like latest swing high. This is sorry, this is the latest swing low, the red candle. Let's just tap that. It's now looking to move higher. Generally, what happens up in uptrend, if price is moving something like this, right? Price tends to take out high, take out the first swing low, has liquidity sweep, and then continue to move higher. So if you're looking for uptrend, look for only one swing low. If just in case if this comes down all the way to second low, then price will change its price generally changes its structure and moves lower. This is one of the speed liquidity, like a displacement leg for reversal. Just takes one swing low, then it's okay. Now this might look as a great signal, but I'm still not entering into this trade. Satisfies one of the conditions that, like, it took out the low but did not give us a candle closure. It left a wick here. Delivery is not good. We need good clean signals. This is pretty small green candle to be a bearish break, to be a bullish breaker block. There's no IFVG happening here in this leg. Yeah, something is happening. Price is just moving randomly. Guys, give me some minutes. I'll be right back. Sorry for the delay, boys. Okay. Anyways, it's 11:04. I'm not looking for any other trades. It's already 3 hours to FOMC meeting minutes. Mm, not looking for any trades. So also we do not have any good level of interest right now. Even for us to develop a good good level of interest, it will still take another 2 to 10 minutes candle, and by the time I'll be out. So I believe this is it for today. I had we took two trades. First was break even, which was like a reflex trade that I entered. If I would have holded that trade, that risk was 50 points, against which target was almost 140, like 145 points. Would have hit that without taking a stop loss worth. The second trade that we took an entry on breaker block. Trade went 100 points into our favor. We took 60 points. Like I personally took 65 points and partials, but the partials I marked were 75 points, so that's another good trade. So that's it for me today, guys. See you guys tomorrow. We'll be back with another day. Let this FOMC meeting minutes pass. Let it Once it passes, we'll start getting uh, good price action from tomorrow. We still have 2 days. One good trade is going to be good enough for the week. No need to rush anything. If we get price as per your setup, take the trade. If not, then just wait for another opportunity. That's that's what day traders mean. That is what being a day trader means. It's just we need to wait. It all depends on you how long you want to do this job. You can do it for 2 hours, you can do it for 3 hours, you can do it for a whole day as well. But keep in mind, you need a good mental capital to do this thing consistently. If you just sit on your desk, you are going to take a trade. You are going to take trades, which personally you will, which generally you would not take. Like you will deplete your mental capital. Once you lose, you'll start taking revenge trade. You'll start taking trades like here. You'll say that this is a breaker block and enter here, expecting a continuation when you know that price is not delivering correctly. So keep calm. There's always another day to trade. Tomorrow is CPI. Hopefully we get a good trading day tomorrow. And as you know, on a good trading day, we always capture more than 130 points. That has been our average. So one loss doesn't matter as long as you follow your system. It doesn't matter that you took a loss. That's part of statistics. Second thing, keep your risk managed. Even if you lose one trade, you don't need to be like, it should not affect you that much that you start revenge trading. Revenge trading is one of the worst habits that a beginner trader, even intermediate trader, can make. So that is what will be keeping you from being a consistently profitable trader. On a bad day, you will continue to trade for longer than expected, and then you'll start losing, and they'll blow up your account on that day. So on a bad day, understand that you have to you need to stop until unless everything meets your criteria. Even if you get everything according to your setup, and you get two trades and both of them fail, just close it for the day. You know that there are setups getting formed but not delivering, right? Now once you know that, just be done for the day. Be back tomorrow. We took a loss yesterday of 46 points. We covered 75 points in one go. Trade actually moved 100 points in our favor. Holding full quantity, we would have made twice of what we lost yesterday. And that is what risk reward is. But understanding of day, understanding price action, how it is moving, what are you looking for, and everything, combine everything and preserve your mental capital, preserve your account balance, and trade only when you see that yes, this is the perfect trade. This is such an obvious trade that you should be entering that trade. Okay, that's it from me, guys, for today. See you guys tomorrow. Please like and subscribe if you like the content. If you like the way I break down the price, if you learn something from me, please like and subscribe. See you guys tomorrow with another price breakdown and analysis. Have a good day.